All right. Good morning. Good morning, everybody. Hope you're having yourselves a fantastic start to your Thursday. And honestly, what has been I don't know what the right term is here, maybe boring. Feels a little bit like a boring trading week relative to what we had there last week. And I'm fascinated to see what's in store for us here today. Pretty big sell off day there yesterday, but weird sell off, right? Like, didn't really give us any clean entries, couldn't quite get anything to kind of sync up exactly the way that we want. And that's fine, right? That's a totally natural part of trading. Some days you're going to have busy trading days, some day you aren't. Doesn't mean that we're idiots, doesn't mean that we're bad traders, none of those things, right? It's no expectation that every day our edge is going to be sharp. Some days it's just not perfect, or some days it just doesn't quite behave how we expect. And that's a totally natural part of trading. Now, what we don't want to do here this morning, right, is now overcorrect and totally change our technique and make a million different changes so that we are optimizing to take advantage of yesterday's trading day. Yesterday, we had one win. That's all we needed. We only had one trade. And just because I didn't catch the biggest move of the day doesn't mean that my system doesn't work or my technique is broken or that I need to make any radical changes. So today is very much a day where I need to like double down and focus on the variables I can control, right? Really put myself into situations where I'm managing my risk well, where I am being deliberate with my position sizing, where I am not forcing decisions just because I want to feel alive. I'm here because I want to make money in the long term, not the short term. The short term noise, PNL, trading decisions, all these things, they're all a liar, right? The short term noise, the short term variance, the call it even like short term feelings that I feel as a trader, they are not designed to make me more money. They're designed to trick me into breaking my rules, skipping my steps, compromising the quality of my process. And I am not interested in doing any of those things. I'm not interested in cheating myself of my future gains. And honestly, egotistically, I want to have a perfect month, right? And a perfect month in this context isn't necessarily a P&L thing, although that would be a big element of it. I want to make sure that I am not breaking any process-based rules. I'm not skipping any steps. I'm not just trading for a P&L number. And I think I'm on pace for that here so far. And I want to continue pushing that narrative more than anything else, because the evidence I have that when I follow my rules, stick to my process, obsess over the variables I can control, improve my technique, get faster at setting up my orders, where I pay attention, right, better to what the market is doing, then I make more money. When I think showing up and drinking 2 cups of coffee is going to make me a reasonably controlled trader, then you need to send me your coffee, right? The one that you're getting or the one that you're drinking. But I don't think any magic beans are going to create that environment for any of us. So instead, we got to suck it up, tough it out, shut down the voice in our head, learn to trust our system versus our impulses, and then build out our technique from there. So very excited to see what markets have in store for us here today. And yeah, hopefully it's an interesting session and we can have ourselves a ton of fun. Last night I did a bunch of filming here for that psychology series. It's taking a little bit longer than I would expect. To a certain extent, my outside of trading life has been chaos with a bunch of projects that I'm working on. So it is taking me a little bit longer. So I do apologize. Hopefully I can get a few more filmed today, and then I should have some time Saturday to film again. So yeah, looking forward to sharing that with you all. I think it's going to be awesome. And yeah, let's get after it. Enough ranting and raving here like the lunatic that I am. And let's get after it. So today, not too crazy from an economic news perspective. We do have some 10 a.m. data. Does feel like a very long time since we've had any, which is a bit of a weird sensation. But that should be okay. Again, tomorrow I would expect it to be like the big day to day. But fine. How's everyone feeling this morning? Everyone feeling good? Amazing. All right. Great to hear, guys. So, first things first here, ES, right? Red candle, increasing outlier volume, quote unquote, gap up. Hey, good morning, Rusty. Love that, Bonnie. So it's going to be a 2 out of 3 to the downside with volume again. A little bit of a better volume profile, right? A little bit more impressive. Hey, Mike, how'd your Vikings do on Sunday? Sorry, I couldn't help myself. um, uh, I'm sorry, I don't know why that's making me laugh so much. 67.20 to the downside here this morning, and then we're going down to like 66.90. Oh, sorry. The only thing that's like going through my head, there's a video from the NFC Championship game in 2017 where there's a poor woman in Philadelphia who's like walking down to the stadium, walking down to the link, and she encounters like some 20-year-old kid who's just yelling "Go Birds" in her face. That's all I'm thinking about right now. So I'm sorry to bring up that trauma, but you brought that upon yourself. I'm sorry. Under 66.90, we're gonna kind of push it down towards 66.50. I need to compose myself here. All right, and then to the upside, probably not something I want to be super effective or chasing. If we look at this on a daily perspective, it does look a little bit like a fake out. And we're so close to all-time highs that I think it is reasonable for us to continue to get that upside narrative. But I would need to see like just a general market cooperation. So that's going to be a 67.50 as our starting point, and then just targeting 68. Again, extreme prejudice on the upside narrative here this morning. And we'll see how that goes. All right. All right, NQ. So very similar story here, right? Technically a 3 for 3 to the downside, similar to what we had there yesterday, where we still have like a sign of weakness, right? With it effectively behaving a bit like a fake out. So, you know, maybe there's a bit of an environment there where we could push back up towards that 25.2. I'm actually just going to call this 25.1 because we're at 25,000 right now. Okay. And then to the downside here, 24.8 is our starting point. Yeah, I don't know if I need to push it further than that. That's already quite a bit of space. And then again, right, upside only. Right. So, or upside if, only if market co-ops is probably the best. All right. CL. Wow. Finally getting some nice trend in PA here. Already increasing volume in the morning, which is kind of interesting. 3 for 3 to the upside. So we are looking for a trend line breakout here at this point. That's going to be a 62 pop. And then we're looking to push this up towards next point of contact on that trend line, right, which is 66.50. Excuse me. Okay. Type and then 66. Yeah, that pre-market volume is like the biggest, Michael, I think I've seen in a very, very long time. Pretty interesting. So, yeah, that creates definitely an environment for us. Okay, Apple, red candle, decreasing volume, gap up. So 1 for 3. Initially, internals aren't looking as scary, right, as our story. Tesla gapping down here. Not a terrible earnings, actually. But we are technically going to call this a weak 3 for 3 to the downside. Man, I cannot get rid of this freaking cough this lady gave me on the plane. Does not want to disappear. It's driving me nuts. Microsoft, week 2 out of 3 to the downsides with volume. Amazon, red candle, decreasing volume, gap up. So again, 1 for 3 internals, not as scary as maybe they appear. NVIDIA, red candle, fake out E again, increasing volume, technically gapping up. So 2 out of 3 weak, 2 out of 3 to the downside with volume. AMD, not outlier volume, but technically a 3 for 3. Meta, green candle, increasing volume, baby, gap up. So again, weak 2 out of 3 with volume. Netflix, post earnings, fine, right? We're kind of always expecting a big sell-off day or a big reaction, maybe not big sell-off. 2 out of 3 to the downside with volume setting up as an inside bar. And then the Google Rooney, red candle, decreasing volume, gap up. So again, another 1 for 3. So a lot of that volume yesterday doesn't appear to be influenced by a trending narrative, right, in our leading names. That probably creates a little bit of that. I'm not sure what the right term is, but maybe like a lack of smoothness, right, that we saw in the price action there yesterday, where indexes were giving us a overcorrection or an overreaction sell-off without necessarily having the like strong internals to finish as like a full body bearish candle, right? Something along those lines. That means we need to keep track, right, of those internals here this morning. How are they behaving? Where's that strength? Where's that momentum? How can we basically control those variables? If we can, I think we're going to be in pretty good shape here. And we should be able to put together a pretty nice opportunity and can go from there. I think by default here, everyone's... anyone here who's using Zoom right now? Anyone in Discord that's using Zoom right now? Any issues with it? Is it fine? All right, perfect. All right, so markets are open. Let's get after it here a little bit this morning. Let's see what's in store. Honestly, I woke up I don't know, in like kind of a euphoric mood today. I don't know why. I feel good. Got to basically focus on controlling that a little bit. The Zoom link is right above this channel that you're in right now, D. Scott. So right above you, there should be a channel right above the live trading. It shows like Zoom trading room. That gives you the backup link here if the Discord is full. a good. I'll look that up. Tyler, yes, please. Thank you. I'm sounding like a smoker, even though I'm not one anymore. I'm a gum guy. So let's get after it here a little bit. Go from there. I'm always looking for confirmation bias for the health quote unquote things that I do on a daily basis. And Andrew Huberman recently did a podcast on nicotine, and he was very pro nicotine gum, and so now I feel like I'm a genius. The long may I keep finding podcasts that give me good confirmation bias. All right, so not a massive range here, not massive volume, all things considered. A little bit bigger than what we saw there yesterday, which is good, but the big spikes there yesterday happened at 12:30. Yeah, just get some powder. I love that. I can't buy pouches easily here in Canada, Rusty. I can buy the gum off Amazon. So when I lived in Montreal, there was an Aboriginal reserve that I would go to by one of the golf courses I would play, and they had all the good American nicotine and tobacco and all that fun stuff. But unfortunately, I've not found a direct market source like that here yet in BC. All right, so early doors, right? First candle, we're looking for just consistent breakout here across the board. I've got my leading names here on my other monitor today. So that's what I'm watching there. Trading View being a little bit of a slow bitch. Again, I feel I've got a weird weird energy this morning, so bear with me. Hey, now we're talking, Rusty. Yeah, I used to buy from them, Greg. What you might be on ES, Dave. You might be on ES. Trading View is very slow this morning. Heck. Where I'm not hotspotting off of my phone in London, so it should be a little bit. Would think it should be a little bit smoother than this. I feel like once a week, Kiki, it's so slow. It's like every now and then, I don't know, their servers get overwhelmed or whatever it is, and it becomes so annoyingly slow. Drives me nuts. Project X is behind or Trading View is behind? Interesting, because Project X is built off of the Trading View platform. Like they're white labeling their charting. So that's interesting. I made a mistake of clicking away. Fuck. Oh my god, this is now just a piss take. Again, unlikely that that's increasing volume. Right, I see it on my other screen. It is not. I don't know why it's there. It is there. It finally loads. Just as it loaded, I was about to click another another ticker. I don't think I'm going to do that this morning. fine, Mr. Market. Force me to only watch NQ. Yeah, exactly. I was thinking about this a little bit last night, but I think NQ's probably the most in love I've been with a ticker in my career. Like the amount of trades I take on it versus anything else is very disproportionate. Boy, do I love it. It's such a fun instrument to trade. Hey, good morning, Christina. Okay, so we might have a chance here for increasing volume. I mean, the dream I have in my head here today is a nice little one and done. Let's see if we can pull that off somehow. Oh, Renee, yeah, you're telling me. Yeah, it's gonna be close. It's gonna be very close. Well, I'm just watching that volume profile. Looks like it didn't quite get there in the end. Two men did though. All right, let's keep an eye on this. Target here would be 25,107. So it would look like something like this. We would need a stop loss to be in the 55 range. So our entry zone is about 13 points, or like our risk reward zone, I should say, is more 13 points. Looks like I might not be able to get a chance here. Still an okay candle. Held higher highs, higher high, higher low. All right, so I think we're still reasonably in play here. I'd like to tighten things up a little bit. And then if we pull under this blue line, guys, this is not going to be an immediate execution. I want to wait to see if it flushes through and bounces basically under 55.50 and then higher. Because I haven't seen any quote unquote bearish price action here yet, ironically, I think it is important to see those bears fail first prior to being aggressive. Literally, as I finish saying that, it runs, but that's fine. Classic NQ shenanigans. So just be a little bit patient here, right? Just be a little bit patient. At least trading views faster now. Solved one problem. Oh. Hey, good morning, Mike. Bonnie, are you here this morning? Sorry, Tammy. Tammy, are you in here this morning? Perfect. Sorry, I meant Tammy though, Bonnie. I've got a call with her today. I guess not. No worries. All right. Again, keep focusing here on the old NQ. So are we going to get that little fake out here? Could be an 06850 lower now. We might get this to actually behave how we expect. So now I'm going to start to set up my order window, but I am just watching for now. All right, so stop loss 055. Reference price would be 061, so 6 points of risk. So I'm watching here, guys. I still think maybe there's a little fake out flush coming under that 55.50. So I'm not in a rush to click submit here yet, truth be told. Even if this candle closes, then I can maybe get a tighter risk reward ratio up here where I don't have to feel like I'm trying to catch a falling knife. But what I'm looking for now, right, is not necessarily just a setup. I'm looking for a setup that gives me asymmetric upside. Right, so that's an okay little pullback into that zone. That's like a pretty good bounce. But let's wait. I mean, it's increasing volume. It does complicate things a little bit, I would say. All right, I'm going to wait for this on the 3. I seemingly can't quite get the reaction I want on the shorter time frame, so elongate that, give ourselves a slightly larger target to go after, right, which should open up a little bit more flexibility. And we're 30 seconds to go, and we already have that increasing volume, so we should get there. That's the classic trader's conundrum, Kiki. You're winning trades, you're never in big enough. You're losing trades, you're always in too big. Welcome to the mental torture chamber of day trading. It's an immediate squeeze higher there. I mean, the other thing that I could trade here is on this 2-min. If we can hold above 100, then I open up 25.2 as my target, and that's much more interesting. Let's feel a little bit unfortunate maybe to have not gotten that, but that's okay. If I torture myself with hypotheticals, I am destined to lose. All right, good volume here. Okay. So now we're targeting a 200 move, right, on this 2-min. And let's see, do bears fail here in some context? And I get the super tight risk reward. That's effectively what I'd be looking at here. So for now, 6 points of risk, 7 points of risk. Okay, and there's our possible fake out. The 108 stop loss, guys. 108 stop loss, 25. 108 long, right? Again, let's see how this thing settles in and behaves. We will potentially keep changing this until it finds that good little trampoline bounce. You know, maybe logically that point would be around 100. It's kind of a weird, I don't know what the right term is. There's a weird, I don't know, like there's a weird balance to be found between buying the pullback fake out and not buying a falling knife. I think that's probably the hardest thing about these fake out entries. All right, so now stop would be 093. 25093. 7 points of risk. Not bad. Well, there's that big bounce we were looking for. So again, this might tighten up for us, a little inside bar. So next candle could also give us that same sort of characteristics. Oh. Okay. So you're now looking at a 111 stop loss. Again, let's see if this holds. This 111 is an easy number to type in. All right, so we are looking here now, looking for a gentle pullback. I'm not sure if that was it. Okay, watch the little shake and fake here. That puts me down to a 110. Still no entry. We are getting closer. So we're looking now for a gentle tick by tick pullback right into our entry zone. Oh, this motherfucker. All right. No, we'll keep it here on the 2. So gentle here is what we want. Five min should be increasing volume as well. So if we don't get the entry here on the 2, we'll reset this to the 5. A little bit annoying though. Can't say it's not shitty. We haven't gone an entry. And it's an increasing volume here on the 2 min. It's kind of interesting. So 2 min and 5 min are effectively the same. So I'm just going to keep it on the 2. So we're looking at a 135 stop loss. Again, kind of that. Yesterday we had a lot of those like immediate flushes, then fake outs. Today we've just seen a lot of like immediate flushes or immediate pumps in this context. So there's a little bit of an intrusive thought where it's like, if I don't wait for the fake out, I'm going to get stuck in the fake out. Hey, good morning. Nice work, Mike. Patience paid off for me from last week. That's beautiful. Again, I'm just going to see if I can get a tight risk reward ratio here on the 3. Okay, so for now, we're looking at a 149 stop loss. Pretty positive. 149, again on the long. Reference price here. I mean, 150 is probably a little bit too aggressive. It'd probably be something like this. And then again, same thing, right? If we pull under that blue line, I'm basically just going to take a deep breath, make sure it's not flushing through as if like the rug got pulled out underneath it. And as long as I don't see that quote unquote rug pull, I'm going to look for my entry. Okay, so that was definitely a rug pull, right? That was super fast. Like it went from 157 to 152 rapidly. Now it's a little bit of a better reaction here now. So now we're looking at a 144 stop loss. I have to think twice about that. And so now let's see again, right? Same thing. Perfect. So I am in entry price 149, stop loss 144. Where is my pen? Okay, so far so okay. And now we're basically making sure this isn't a failed breakout, right? So let's see this thing hold and close above 160, and we should have some joy. I want to see this thing go squeeze mode, right? Don't like that. All the other candles we've seen here so far, right? They've had their own psychopathic characteristics. I'd like this to follow suit. Ooh, don't like that. That was your retest, though. Did feel a bit funky. Not a great close, or not a perfect close. Trying to buy myself a little bit of time to make this decision. There it goes. Beautiful. So now, because I've had some, we'll call it creeping doubts about this, right? I'm now focusing on closing as P&L is increasing here. All right, guys, I am out. Exit price 167.50. 167.50. Boom. Let's go. So plus 1480 on that before commissions. Let's go. Good start, team. Good start. A little 3R win to start the day off. Yes, please. And again, if this thing continues to behave strong, no problem. The other maybe element of paranoia I have here is around the data that drops in 5 minutes. We haven't had really any significant 10 a.m. data all week, honestly, for a couple weeks. I had 4 contracts, Dave. My risk was 5 points, right? Entry 149, stop loss 144. I actually probably could have gotten 5 contracts on that, and I didn't. But that's fine. Let's go, Shiv. Nice work, Jason. Oh, fantastic, right? A little bit more than 3 times risk. Beautiful. Good job, guys. Oh, let's go, Mike. Congratulations. Yeah, good first trade there, guys. Good first trade. We'll take that all day long. Yeah. 3R win. Yeah. Yeah. You got to take a 3R win every time. Ah, feels so good though. Nice, Mike. What a reward. Beautiful. Okay, so I'm going to wait this thing out now until 10 a.m. data, right? Get that clearance out of the way. So I'm going to go get another magical cup of coffee in my system. So I will be back in just a moment. All right. And looking back at it now, right? Although we didn't maybe completely top ticket, we did a really good job not giving away any P&L here. I mean, games that shouldn't. You should have better executions because they have more infrastructure in place, right? To manage things versus like a paper trading feature. But yeah, I would not expect there to be any significant lag consistently. It for sure can happen. And that can happen when you're trading live too. But I'm not quite sure how their order matching algorithms work. But like sometimes, guys, they're being 2 second, 3 second, 5 second delay from when you click submit to getting your entry is a total possibility, especially if you're using limit orders, right? Because a limit order is telling the market, I only want to get a price or a fill at the price that it was when I clicked my mouse. If it's now above that price, you won't get a fill. So it waits for it to get that exact instruction. And so sometimes that can create a little bit of a latency gap or whatever you want to call it. The trick that guys you guys want to think about here, right? In general, when we're thinking about our entry submission timing or how we're doing it, we want to, if we're going to be using that limit order technique, if we're going long, we want to be going long on the downtick, right? So as price is decreasing, if we're going short, we want to go short on the uptick. This ensures that when you submit your order, right, the next move is above your price and you're going to ensure that you get filled. If we do a limit order and price is increasing, when we click submit, price is already then above where we clicked submit on, and we're unlikely to get a fill. So there's a few little like technique things, right, that you can focus on. I think it's a really actually valuable thing to look at on your entries, right? Instead of waiting for it to feel right, you're waiting for it to give you an entry on the downtick or on the uptick. And so that then leads to missed entries if we do the opposite of that. So I like if I'm entering a trade, I always want to be entering it as it pulls into my zone, not away from it. That makes sense. Good start though, guys. Good start. Oh, absolutely, Kiki. Go enjoy the rest of your day. Don't overtrade. It's not worth it. You lose money over trading. It never makes you more. Plus, $600 in your pocket. Now you're in India. That's like, that's some queen shit right there. Yeah, exactly. Like every time I go back to Poland and they spend in zloty there, not in euros. And it's like walking around wanting to pay in USD or in Canadian dollars. It feels like a game changer. For sure, Roberto, right? But it's the same problem you have if you do a market order. So it's like you always risk getting filled if you click submit when it's above your price. Right? So that is not the error you're describing is not based on the order mechanics. That would be driven by human error. Right? That makes sense, Roberto? Yeah, we did a pretty good job there closing that, guys. What's the total, Mike? I reckon that should be a walkaway point too, probably. Dealing with more dopamine than expected. Nice work, Ron. Fantastic. I mean, to a certain extent here, guys, we've spoke it into existence a little bit here this morning, right? I did think what you would call it. I do think that we kind of got ourselves in the right mindset, right? Saying, hey, I want to have a one and done day. We set ourselves up for that pretty nicely. Now we should have no pressure, no anxiety, no stress making any further trading decisions if we do get any. Like the trick, James, I would say consistently to getting the entries you want is to find that minor detail that you can really focus on that tunes out the noise. Because theoretically, right, if I'm entering a trade and my stop loss is 146 and my entry target is 151, I don't care if I get 150, 150.75, 148.50. None of those particularly matter. Right? So the difference between a 150.75 entry and a 149 entry, I'm not caring about that. That's not really the point. I'm trying to just zoom in as much as I can and get a fill under that blue line as our starting point. And then my second starting point, right, is a fill where I spend as little time in drawdown as possible. So the effort, I guess, or the thing to focus on, right, is what little technique thing, what little bit of price action, what little whatever reaction can I zoom in on to focus so that I'm not thinking about the price too much. I'm the same, Mike. I'm the same. It's best to not have those P&L thoughts rolling around in your brain. So in that context, right, James, when price is under that blue line, all you're looking for is for a downtick, right? Or if it's above the blue line and we're going short, looking for an uptick. And just slowing yourself down to focus on that super minor detail. And then assuming your entry technique is the way it should be, you're going to get a fill. So one of the things that I've seen a lot recently is people are blaming platforms for executions. And then when we do a mock trade together in a one-on-one call, they're bumbling and fumbling with their trade execution, and they end up chasing. Right? So if we can get muscle memory around how we set our order window, instead of putting our energy into how do I execute this trade, we can start to focus on those little minor details that actually lead to the trade execution, right? I don't know what that means, Dave. Because a limit price, Roberto, will fill you at that price, right? So you don't end up getting the discount. So if I set my limit price to be 150.75 and I click it at 148.75, I'm going to get filled at 150.75. So I won't be able to monetize that discount. Right? A limit order is saying limit my fill to this price. That's what that means, right? So we want to be submitting orders at the current price or better so that we can actually realize that discount when we purchase under the reference price. That makes sense? In general, guys, right? If you're having issues with Discord, you got to refresh your Discord. That's it. There's nothing else I can do. So we did a pretty good job there, kind of catching that last chunk of the move. It's pretty fun. Since then, we're not seeing really any nice volume profiles, which is fine. Yeah, for sure, Roberto. But if you're every tick you're updating your price, you're just going to miss more trades because now your execution is far more complicated, right? So now when it's under 151 or whatever it is, you're changing your price to be 144 and then this and then that and then this and then that. And you're opening up so much extra room for error. Right? You're going to miss more trades that way when you have to change your inputs right before entry. So the point of setting the limits to 0 is that it effectively does that for you, right? You can choose the price that you want to get filled at. That's up to you, but you have to make sure that your technique around it is smooth. Nice work, Jason. Congratulations on passing the first eval. That's incredible. Well done, sir. What I'm preferring, right, is not necessarily the visual cue or the price one. It's just that if I'm trying to pick a price or I'm trying to pick a whatever, I end up missing details, right? So if I'm just like saying, oh, I'm going to hit submit the second it hits 134, I'm going to buy submit on a lot of elevator flushes, right? Or I'm going to buy click submit when price is chasing towards that direction. And so it then hides, right, certain technique flaws that I can avoid. But look, people are giving me a lot of grief on this execution technique. You do not have to use it. That is fine. It's up to you guys if you want to or not. I'm not here to force your hand. But don't complain that you're missing trades because your technique is sloppy and then say you don't like the technique, right? Choose your fighter, right? No matter what you choose to do with your entries, with your take profits, with your stop losses, nothing is perfect. Nothing is going to work 100% of the time. You are going to miss fills. It happens. So choose which one you're comfortable with. Choose which one you're happy with. Be consistent with it. Learn how to maximize your strengths and weaknesses and how to protect yourself from its downsides, and you will be fine. But if on one trade you're doing one thing, one trade you're doing the other, the next trade you're doing this, the next trade you're doing that, you're just going to create analysis paralysis for yourself, and you'll never find any consistency. It really is, like, I know it sounds ridiculous, but we're not optimizing for 100%. We're optimizing for like 70%. So we got to stop looking for these absolutes, be okay with pros and cons, and learn how to make the cons smaller by effectively creating discounts for ourselves. Yeah, like it happens to every single trader. Every single trader misses fills. Every trader gets faked out. Every single trader gets stopped out before a big run happens, or every single trader, misses big moves. Like, these things are just a part of the game. And so there's nothing I can do, nothing I can say, nothing I can teach you guys that will ensure you never get faked out, catch every single top, get every single entry. Like, those things don't exist. So we have to understand that we have certain restrictions just from like a reality standpoint, and we can't overcomplicate it. I like using this technique personally because it ensures that I never lose more than I expect, which is my primary focus. And that when I buy a discount, I can usually lock it in. So it allows me to gamify losing small instead of having to cut trades early. And it allows me to, instead of looking at price or looking at things, I can make decisions based on risk, which suits me. It suits the way that I like to trade. And for every technique that exists, right, either strategy wise or execution wise or stop loss wise or position sizing wise, there is this I don't know, I guess like harsh reality is that everything has confirmation bias to it, right? So I like using it because it works for me. So I think it's best, right? In the same way that the strategy that I trade works for me and I've seen it be successful for other people. So I think it's best. Doesn't mean that it actually is, right? But everyone has the thing that is best for them. And embracing that concept and pursuing that selfishly will actually make you a lot of money long term, right? So trading is filled with confirmation biases, survivorship biases, with those sort of things. So take everything with a grain of salt, explore different things. But for sure, I will always say that I think mine is best, or I think this is how you should do it because it works for me and I've gotten awesome results with it. So confirmation bias is a huge element there. 100%, Chris. Like the other reality was we're not one trade away ever from being rich. It's just a drop in the ocean. It's a one gold coin in a pot of gold. So it's not never the end of the world if we miss a trade or if we get stopped out or if a win doesn't go as far as we want. I'm never one trade away from being rich. Nice work, Mike. So for now, we're just hanging out. I don't see anything too interesting yet. Oh, let's go, Jason. Are you an Eagles fan too? Hey, Mike, following your rules, right? That's the more sustainable thing. So I want you to celebrate that, trusting yourself, right? Building that confidence, because that's going to make you a lot more money than any P&L obsession here today. Oh, that's awesome. And look, guys, I want you to all I see a lot of discussion about the contracts, right? Number of contracts. This is where I want you guys to be extremely selfish, right? In your position sizing, in your risk tolerance, right? In basically the dopamine that you're exposing yourself to when you make a trade. The reality here, right, is that thinking in P&L terms doesn't scale, but everyone there had the opportunity to make 2 times their risk, 3 times their risk, right? Potentially 4 times their risk on that trade. And that's a concept that can grow. So you can have a 2R win regardless of if you have 2 contracts or 20 contracts, right? 2R is 2R. So I want you guys to embrace that concept more. It'll actually create a lot of mental clarity. We don't unit size here, right? Or we don't unit size shame here. So I don't care, or I don't hold it against you when you trade 1 contract when I trade 4, or you trade 4 contracts when I trade 2. If you care and you are managing your risk responsibly and you're keeping that consistent, you will build the skills to improve it. And the way that you want to learn to control your dopamine is to not get obsessed about the number, but rather the factor of risk that you are generating on that decision. Because a 2R win is the same if you're trading 1 micro or 100 minis. Still the same thing, right? You may double your risk. So think in that way, right? Hold yourself to that standard. Gamify the numbers around your trading in that context. And don't ever feel ashamed or frustrated or dumb about your position sizing. If you are choosing to size down, I love that. That is such a responsible decision. You are finding a way to elongate your learning curve. You are making it easier for you to survive. You are learning how to control your dopamine and emotions and frustrations around trades. And that will ultimately generate a much larger, bigger win than having that 5 contract trade that moves $2,000. That's a fleeting number and a fleeting moment. Choose to play for the bigger prize. And I don't want anyone here to ever feel embarrassed because they're choosing to size down and choosing to be responsible traders. That is exactly the right thing to do. And it should be celebrated, not covered in shame. So well done, everybody, right? These are things that I love to see. Sounds like you got some smart kids, Mike. So generally, Hunter, I would say no, right? If a move gets 2 or above 2R, should you ever allow it to drop below 1R before exiting? Ideally, no, right? But that's one of those things, again, you're solving for 70%. There's a fine line between giving a trade as much time and room to run as possible versus not taking your wins when you're there. So, like I will say, it becomes easier to hold out for bigger wins once you've got some P&L in your pocket. You've got some evidence, right, that making money exists. And yeah, it's always a fine line. It's always like a little bit of a balance. You're never going to get that perfect 100% of the time. But in general, like the rule I have for myself is if I went up to R on a position and then I lose money on that trade, I'm a fucking idiot, right? Like that for me is the worst possible feeling as a trader. So in general, I would say that like from a personal perspective, I believe that my greatest tilt comes from scenarios where I'm up big and then either finish up small or in the red. So I want to avoid that sensation effectively as much as possible because it brings out the worst of me as a trader. Even though I maybe made $300, being up 1,500 and then closing at 300 doesn't make me feel like like I made $300. It makes me feel as if I lost 1,200. And that's the sensation that I want to avoid because it removes my ability to be impartial or to trade as best as I can in future scenarios or setups. So it's a way to manage that. I don't use trailing stop losses for that exact same reason, Todd, because I don't like seeing, I don't like closing as my P&L is decreasing, right? If I'm interested in a trade or I'm interested in an idea and I have now closed as my P&L is decreasing, I've given back too much. I set myself up for that tilt opportunity. I'm kind of a believer that if I'm setting a trailing stop loss, I'm kind of admitting to myself that maybe something about this trade isn't behaving how I would expect. And if that's the case, why not just close my trade at 160 where it currently is instead of waiting for it to pull back to 145 and then closing? I'm going to make a lot more money closing as my P&L is increasing. And then if it behaves the way that I expect, jumping in and trying again. Yeah, Jack. So 3-min looks interesting. I would like to see a break and close above high a day. Otherwise, I only have evidence of rejections inside those areas. So I've seen price basically stall out here in between this 170 to 180. So like theoretically, my next point of resistance, right, is that like 181 area. So I'd be a little bit skeptical here to trade it. It is really good volume and it's a good enough candle shape, but I want to see it clear through high a day. So Todd, I actually did a study on this last Christmas, because for a very long time I was doing the trailing stop loss technique where I would be protecting my wins. And what I found is that if I had just closed my trades at the moment I set my trailing stop loss or pushed my stop loss to protect my position, then I would have made something like 33 or 34% more on that year versus the getting stopped out at the trailings. So in my experience, the trailing stop loss, we do it because we think that we can get that monster win. But generally, those are very, very few and far between, that they don't actually cover the difference long term of getting stopped out protecting. Now, I do have one exception to that rule, and that is when I pyramid into positions. I'm a little bit temperamental with how I pyramid. Like it sometimes I'll have like a week where I do it a bunch and then I don't do it for a month. What I mean by that. And so when I pyramid and I increase my position sizing, I am only interested in doing that where I have a risk-free trade. And so I always then set a stop loss above my average entry price in that situation. That exists because as I increase my position sizing, now the pace at which my P&L moves has changed from where it was initially. And that sensation, right, of seeing your being up big and then seeing yourself go red or negative on your P&L happens or can happen very, very quickly in those trades. And all of a sudden, the second you're offside, you can now start to see a really dramatic P&L hit, and it creates that extra level of tilt. So that's the only exception I have in that circumstance. And it's pretty rare that I will do it, but it is worth mentioning that that does occur on just normal trades like the one you guys saw me take here this morning. No emphasis, right, of trailing my stop. It just was the instruction of, okay, now we're up 2R. So now the focus is on closing as P&L is increasing. And in that situation, I'm not looking to top ticket, right? I don't need to get that 180.25 exit. I just want to get out as my P&L is increasing so that I'm protecting my mentality and not seeing myself give back a tremendous amount of P&L. Make sense? You know what, guys? We might be having a one and done day here. Feels nice. Feel calm. Oh yeah, one sec, Roberto. Sorry, I missed that. Um, so remind me what slash when invalidated the 3 for 3 downside daily setup. Um, can you expand on that a little bit? What do you mean? Like, do you mean why did we have a bullish bias today, or why did we ignore some of these outlier volume candles? Yeah, so worth just looking here on the daily time frame, right? So we are still stuck inside last Friday's range, right? We haven't made a higher high or we haven't made a lower low relative to that price. So it's really hard for us to argue that it's trending price action in either direction while we're still stuck inside that zone of compression, right? So had we made a 3 for 3, but we were outside of that Friday low, that would have introduced a bearish bias or a bearish only bias because we have a logical reason to say trending PA. In this circumstance, we've effectively seen one green day, one red day, one green day, one red day. So it's just chop and consolidation in both directions while not really giving us any trending PA. And then when we looked at our leading names, a lot of our leading names were telling us much different narratives, right? Weak 2 out of 3, pathetic looking candle shapes, kind of indecision in our daily narratives, so that we didn't necessarily have as much fear that this sell off was necessarily supported by the move of the market. So by default, right, a 3 for 3 or a 3 for 3 to the upside or a 3 for 3 to the downside indicates trending PA. And once we have evidence that the price action isn't actually trending, then the counts themselves are less important, if that makes sense, right? So if we have visual evidence that it's consolidation, which it is, right? We're still stuck inside that Friday range. It's going to be a double inside week, right? Of that. I mean, who knows what tomorrow's going to have in store, but that's the reason. So why did I ignore setups here to the downside? So this one, right? My only increasing outlier volume bar that I could have potentially traded, and it's an inside bar. So it's not a setup candle, right? It's a consolidation candle. The other one that I could have potentially traded here was this 1018, but again, like didn't really stick out or clearly show outlier. So not worth trading. Right, so 1003, it's increasing outlier, but it's an inside bar, so not a strong candle. This 1009, not increasing outlier. This is the only one after that did, but it didn't quite like it's not obviously outlier, right? Not in the same way that this 942 was or this 945 was. So kind of just looks like price action is sticky now more than anything, which is, again, right, a sign of consolidation. You get a quick pop, position to the upper end of the range, and then we stall. Or quick pop, position near the lower end of the range, and then stall. It's just about being consistent in the process, right? I'm not sure how to say this nicely or the right way. It's nothing aggressive here. Because I trade the same effectively setups every day, right? I have the same muscle memory over how I'm looking at candlesticks and volume. I have, I don't know, 14, 13 years of repetition inside my brain of this. I almost like didn't like I didn't view this candle as even having a chance as being a confirmation, right? because it's an inside bar. So because instantly I know that it's an inside bar, it can't be a trending bit of PA, right? An inside bar is the pure definition of consolidation. Yeah, Bonnie. So outlier volume is anything above this white line, right? So this white line on my volume indicator is the 20 volume moving average. So it's the average volume of the last 20 candles. So outlier is anything larger than average. So yeah, just to build to that, right? Like, to a certain extent, you have to train your eye to the point where you're not overthinking, is this a setup or not, right? I know that's maybe not a great answer or like a very sexy answer, but that's it. It just, you train it so that you're not thinking, is it a setup? You're training your eye so that it's a binary, and then you either see it or you don't. Does that make sense? Yeah, inside bar means you are fully inside the previous candle, so you didn't make a higher high or a lower low. Yeah, Shiv. So great question here. Again, it's kind of traded this on the 2-min, right? So it's a little bit of like your first candle, you can give yourself a little bit of room to breathe. Had the candle given us that breakout to 25 170, let's say, right? So where we effectively looked to close and then came back to my entry price, I would say a decent sized move has happened and now it has failed. So there's like a little bit of context to what a fake out is, right? Where a fake out, you know, if you're a couple points away from your entry price, it probably you haven't given enough room to kind of actually make a move. If you've gotten some separation away from your entry and then it fails to hold, now you start to say you've got potential, right, for like the fake out to be in play. So I would say that to a certain extent, that is more, it's like half art, half science in that context, right? Where you're kind of looking to see how has price action reacted to my entry? Have I gotten the exact reaction that I wanted? For full disclosure, and I'm confident I said this out loud in the trade, as it was, we got in, right, 149. Price did break out to like 160, and then it kind of retested the 150s. And at that point, right, I think I said like, oh, I don't like how this feels. That was my first chance or first time where I was starting to think, hey, maybe this is a trade that I need to close, similar to the one yesterday. Once it hit those 150s, unlike the trade that we had there yesterday, it bounced like a trampoline off of that price and continued higher. Whereas yesterday, it hit that number and then it was going down 2 points, 2 points, 2 points, 1 point bounce, 2 points, 2 points, 2 points, 1 point bounce. So like the reaction we got on that pullback was a little bit different than the reaction that we got here today. And so we ended up seeing, yeah, that elevator reaction once it retested 150, instead of seeing it kind of continue to creep through those areas. If it did, then yeah, I would have had to have looked for an exit in the similar context as we did yesterday. But I bought myself just enough time to see if it could give me that reaction. It did. And then we were able to close it as P&L is increasing. So breakout through high of day. On the 3-min, not outlier volume. So I'm going to be patient. On the 2-min, again, like if I'm really zooming in on this line, it's still underneath it. So for me, a no confirmation on that. It didn't clear my binary threshold. So it's increasing, but it's not outlier. And then on the 3-min, that looks even more obvious. I'm not really thinking too much about the past in that situation, Shiv. I'm thinking a lot of just in the moment, right? So if a trade is strong, what would it behave like? If a trade is strong on a pullback, it would behave as if it hitting a trampoline, or it's taking the elevator up, or it's on the escalators. And so I'm just trying to see that reaction. If I don't see that reaction, I'm trying to get out as fast as I can. If I do, I should trust my thesis and understand that, okay, maybe it was a little bit early, or I didn't get the perfect entry, which is fine, right? I'm not going to get the perfect entry on most trades. I've heard the term. I'm not sure if I could define it though, James. I appreciate that, Todd. Yeah, I mean, Tuesday was a stressful day, but Wednesday, Thursday have been nice. That's okay. We all have shitty days sometimes. I unfortunately respect you guys too much to not be transparent. Yeah, that's a very fair statement, James. So like my obsession with trading isn't because I actually know what the market's going to do, right? Like my win rate is a little bit better than 50%. So I'm not really trying to solve the market puzzle. I'm trying to solve the Michael puzzle, right? Why do I change my decisions? Why do I change my behaviors? Why do I influence that? And so that's probably the thing that I care more about. And every day I find new ways of effectively sabotaging myself. And yeah, like I always find new ways. So the pursuit here of trading is just knowing that every day I'm going to learn something new, and I don't need to overthink that or underthink that, because I'll never know everything. And yeah, Dave, we are all self-sabotaging assholes. We all find tremendous ways to make our lives more difficult. And yeah, I mean, that's just life. I think in trading, with that context, like most people know enough about trading to not realize how dangerous they actually are. Right? So I would say that in general, most people only think about the upside instead of the downside. Nate, I'm gonna politely tell you to fuck off, to be honest with you. I trade when I have a setup. I trade when I have opportunities. I don't trade when things don't match my system. So in the meantime, right, I'm always happy to try to educate people, answer their questions, and see if the market will give me another opportunity. The fact that you think that profitable trading is placing 1,000 trades and confusing everyone over what I'm doing, that's a really terrible mentality, man. I really don't appreciate that comment. I have taken something like, how many trades is it on the year? 722 trades on the year. So no offense, man. Fuck off. I am not here to entertain you. I'm here to make money. If you don't like it, you're an asshole. Again, setup here, right? Breakout through high of day. Right now, I don't have an active setup. So need to see a breakout through high of day. Fantastic, Hank, right? That's the beautiful thing, right? And not every day is going to be a super busy trading day. Not every day is going to be a super quiet trading day. Like, if I'm held to that standard where I have to place 1,000 trades, I'm damned if I do, damned if I don't, right? That's not fair. Here to make money. I made $1,500 in 2 minutes. Do I really need to be in a rush to take on disproportionate amount of risk just so I can entertain some faceless name? No, that's a pathetic decision. I trade when I have an edge. I don't trade to be entertaining. So reset your expectations of what profitable trading actually looks like, because that gambler's mindset is not going to be tolerated here. Appreciate that, Marcus. Yeah, chasing trades never pays you long term. Feels good dopamine wise, but it never makes you any money long term. You just trick yourself into thinking that, oh, I'm missing the holy grail strategy and I'm doing this and I'm doing that. And that is not the reality. Like, no one complained when I had 22 trades on the 16th. People complain when I have one trade yesterday, one trade today. Variance is random. Don't force it. You're just going to piss everyone off. If I get called a scammer because I took one trade and made money on it, that's an unbelievable standard for me to be held to, and that's not fair. Love that, James. Keep it up, man. Hey, guys, trading is hard enough as is. We don't need to complicate things just because we want to satisfy our ego's requirement for placing a bunch of trades. And I simply won't tolerate that. So, Nate, any other questions like that, you'll be muted and removed, because it is completely contrary to how we choose to trade and what actually makes you a profitable trader. We're here to make money, not to be entertaining. I don't run an entertainment service. You want that, go watch people who are blowing 30 accounts a day, gambling away. You'll have more fun with those assholes. It really isn't. It's, as traders, we fundamentally get paid for our decisions, not our time. And sometimes the best decision you can make is not complicating your trading even further. Because I'm like I said, I respect you guys too much to not be fully transparent over why things are happening, why I'm making decisions, where I think people are failing. I'm not here to waste your time on that, right? I'm here because I think I can help make you a profitable trader. I'm here because I think it makes me a better trader. And that is the obsession. The obsession isn't here about, did I hurt your feelings, or did I say something that makes you uncomfortable? I don't care, to be honest. To the reality here, to a certain extent, is that we have to confront a lot of uncomfortable truths about ourselves to make the changes that actually make you into a consistently profitable trader. And for most people, those things are not a technique thing. They are to a certain extent, right? But trading is a psychological game disguised as a technical one. And it is usually our limiting beliefs around the market, or around our own trading, or around our own decision-making processes that cost us money. So enough harping on Nate. I've been harsh enough here as is. But yeah, I'm not going to ever mince my words here, guys. It's just who I am. That's how I learned. And I would hope that you guys, if you have reasonable feedback, right? And I'm never going to take it personally either. But when you tell me that I'm not being entertaining enough, I'm going to have to fight back on that one. Because that's not why we're here. We're here to make money so that we can entertain ourselves outside of market hours. Everything else is just noise. And life's too short to suffer fools. Renee, hey, welcome to being a trader, right? It's so funny how 20 days in the market will teach you more about yourself than the last 5 years combined. It's a very humbling experience. I mean, I think, Chris, that's a great thing to bring up in the members chat. I'm sure a lot of people would share their why. I would say objectively, right? I probably wouldn't have made money on any further trading decisions that I could have taken here so far today. Like this trade would have probably stopped me out had I tried to run this to the upside, right? Would have gone stopped out on this little fake out here towards 133. Then on this play, I'd probably be quite a bit offside here, or wouldn't have found an entry yet. I appreciate that, Logan. We love having you here too. I mean, dude, your improvement as a trader in 3 months is insane. And it's just by obsessing over learning the variables you can control and getting good at them and optimizing for the quality of decisions that's led to you having 100K in payouts. Profitable trading isn't what's shown to you on social media. That's mostly bullshit. So it's a very different game than what TGR Trades shows you it is. Oh, that's really cool, James. Post that in the members chat. That's really cool. Love that, Tim. Appreciate you mentioning that, man. I don't know. For me, I love trading more than I love anything else in this world. It's my favorite thing I do. It's my favorite thing I get to share with people. And it's for that exact reason, Tim. It's life-changing, right? Like getting addicted to the feedback loop of trusting yourself, believing yourself, learning how you can create change for yourself. That is like there's nothing I'm more grateful for than falling in love with that gamification. I think I've talked about this in the past. But like one of the things that I am most proud of as a trader or proud of as a person is that trading forced me to kill the old Michael. Like that asshole had to kind of die before this asshole could thrive. And that has been a completely life-changing obsession. And I'm forever grateful for that. Love that, D. Scott. Love to hear that. Enjoy your work. Hopefully not too much bitterness there with your boss. Maybe we could argue that this is starting to bull flag a little bit. My biggest concern, though, is the volume. The volume has kind of evaporated more than I would like. Kind of, it looks like a piano chord. I don't know if that means anything to anyone. Ooh, good question, Jake. Any books or podcasts you'd suggest for a trader's mindset? So my favorite mindset book of all time isn't a trading one. It's Man's Search for Meaning by Viktor Frankl. That book changed my mindset more than any other book I've ever read. I read that book at a very important time of my life. And so maybe it was the context over what was going on in my life that made that message feel very important to me. But I would say that fundamentally that has been the most important book I've ever read or will probably ever read. And so that book holds a very, very special place in my heart. From like a trading perspective, I think that the book that probably had the largest impact on me was Trade Like a Casino or Think Like a Casino. So there's, if you go into the Discord, there's a tab called Trading Books. And the pinned message there should have a bunch of, like a Google Drive with a bunch of books in it. And these would all be ones that I would recommend people kind of reading or going through or looking more into. These are all books that I've read and that I could find PDFs online for. So maybe don't tell your local FBI agent. Trading in the Zone, I think, is fantastic. I think that that's extremely powerful. I think this one here, really good, right? The 25 rules of day trading. And then, yeah, Trade Like a Casino, I think, was very, very important or influential for me as well, where it really helped me to visualize or understand kind of the long-term numbers game of trading, how variance works, how to set up those things. Hey, have a great day, Bonnie. Enjoy the rest of your afternoon. Yeah, I saw that. Coach got arrested for a poker ring, I think, which is crazy. Yeah. And there was some player that got arrested too, I think, for something similar, but not necessarily the poker. I don't know. Chris P, which book are you asking about? The trading books or the life-changing book I mentioned? Frankel, yeah. So Man's Search for Meaning. It's about a psychologist who talks about his experience in the Holocaust. So not exactly an easy and gentle read, but for me, it changed my life. Oh, awesome. That's cool. I do love me an audiobook. Pretty much everything's kind of range bound now. I'm not sure how much more energy I'm going to give this market. Pretty happy with my green day. Don't need to force anything. I think I need to probably change this. Not every trade's a pyramid. What the fuck? There we go. Atomic Habits is a great book. I think here's the reality, right? Like, there's a lot of really, really good books out there from incredible people who you can learn a tremendous amount for. But it's almost like you need the context, or like you need to be in a certain life stage for that book to like hit you in the gut and change your life, right? So I talked about this a little bit in the past, but like one of the reasons why I quit my institutional job is because one of my best friends ended up dying on the trading desk. He had a congenital heart disease or like a heart condition, and he ended up dying, collapsing basically on the trading desk and dying. And he had just been engaged, and he just got married. Sorry, did his engagement, and he was just about to move his new wife into his place in Guernsey, and he ended up croaking, and that sent me into a very very dark spiral of depression, and that book was what kind of pulled me out of that. So it is very much like context based to a certain extent. And that's obviously a very extreme example, but something that was very, very humbling. Like in general, that was a really big, big reason why I ended up quitting my hedge fund job. By the time I quit, three of the guys who I'd started with had died. Either through like drunk driving, one of them was. One guy ended up killing himself, and Bilal had his heart condition, his undiagnosed heart condition. And yeah, there was a very big part of me that I was like, man, is this worth it? like, uh, like I might not survive this job, right? So there was a little part of that, and yeah, like it really, really changes your perspective when you're, 25, 26, and the people around you are dropping like flies. Changes your perspective, kills a part of you for sure. Yeah, I didn't really expect to go there today, but here we are. Yeah, trading is a very intense job, very very intense. And if you don't learn to control your mentality, your mindset, your yeah, how you behave, then that stress destroys your life. You might make some money, you might have a good year, good month, whatever, a good quarter, but wealth without health is a pointless pursuit. And health means both mentally and physically. Yeah, crazy. Yeah, I think I'm probably going to log off here in a moment. I don't see myself placing any further trades. Pretty happy with how the day went. Again, anytime I can get a 3R win, that's a good time. And if we're being objective here, last 45 minutes or so, even more than that, price has been stuck. Oh, it's like I'm not super motivated. Brenda, how's your eval doing? Have you almost passed it? Gotta be right on that cusp, right? Keep me updated, all right? Appreciate that, Ian. I think it's quite effective too. I I mean, look, I'm not the world's best trader, but I'm the best trader I've ever been at the moment. In the same way that last year, this time, I was the best trader I've ever been. And I am that because I am forcing myself to improve every day. And so that's the thing to obsess over. And I'm sure in a year's time or 18 months or 3 years from now, I'll have a different strategy or a different setup trigger or a different whatever. But that obsession over getting better, I think I'm stuck with that bug for life. Love that, Tony. Congratulations. Hey, I love you being selfish about your position sizing, Corinna. Market's not going anywhere. And if you keep focusing on those variables, you're going to do just fine. Love that, Audrey. Congratulations. Incredible. 1,700 bucks. So now, right today, no bullshit trading after hours, right? Stack this into a nice green day. Right? Go enjoy your beautiful tropical life. We'll have to look into that one. I've not heard of Choose Yourself by James Ulcher. Well, I'll add that to the list. Enjoy, man. Remember, right? Green days turn into green weeks. Green weeks turn into green months. Green months turn into FUs to your boss. So it's not always necessarily about the number you finish on the day. It's did you continue to put yourself in situations where compounding is easy? And if we now give away those profits and we destroy our ability to compound, we're effectively cheating ourselves of our future gains. So don't do that. Go enjoy your life. 1,700 bucks is an incredible outcome. Have yourself a fantastic day. Celebrate it, right? Optimize for that freedom first, P&L second, and your P&L will generate more freedom. Sounds good, Roberto. Enjoy the rest of your day. All right, guys, I'm going to go final call for questions here. Final call for questions. How was Zoom today? Any issues? I think it worked fine, I think. I mean, today was like the no, Tim, if you just go into the Discord, you'll be able to access it there. But yeah, first day in a long time. I didn't have to address a single latency comment. So maybe that's why I'm in such a good mood. Let's go, Ian. Congratulations. I don't know if Mike is in here. I think he left, but Mike has been a member for a long time now, and he has dealt with the latency for longer than pretty much everyone, maybe everyone besides Rusty. And he has made himself a fantastic career dealing with a 2-second delay. So it's like, it's not the reason why we make money or lose money. It is a convenient and easy excuse, and that's why it drives me nuts. It should not be 20 seconds. I'm not falling for this bait. Oh. You almost had me there. I'll be honest. You almost had me. that's why I realized it was a joke. My brain clicked that one on just in time. Hey, appreciate that, Ian. Trading, like I've said this a lot this week, I think, but my edge as a trader is not my ability to win big. It's my ability to lose small and to lose in control. I keep my mistakes to not be financially painful so that when I do get a win here today, I'm able to be profitable. The math behind our trading, right, with the risk reward that we target, means that for us to basically break even or to be profitable traders, we need to be correct on 33% of our trades. That's it. So that gives you a tremendous amount of margin for error and a pretty significant edge as long as you don't fuck up everything else in between. And that's where you win, right? So then today I had a 3R win, right? So I was risking, let's say, $500 to make $1,500. If those are the stats on all my trades, I need like a 15% win rate to be a profitable trader. So effectively, I can be a complete and total idiot in my trading and still be green. Now, the thing I can't be an idiot about, right, is my position sizing, my risk management, my desire to close losing trades. The more and more that I obsess over those variables and honestly put all my energy and focus into gamifying losing small, then I increase that margin of error and I allow myself to be an idiot and still be profitable. Right? That's really what it is. So, ironically, being a good loser, losing in control, buying discounts, closing as P&L is increasing, it makes everything else about my trading almost meaningless because I can flip a coin and still make money. And that then becomes kind of a sweet spot where your math is driving your P&L, not your perception of what the market is doing. And so it ironically is actually extremely liberating. And it makes it so much easier to be green. And now it's easy to forget those things in the moment. It's easy to skip those steps because they aren't sexy. They aren't the things that people talk about. Everyone talks about, oh, I've got the perfect strategy. I've got the holy grail combo of indicators. Oh, if you just use this prop firm, you're going to be rich. And that's all bullshit, unfortunately, at least in my experience. So the only way that I've been able to consistently beat the market and consistently finish green is when I consistently don't let my losses to destroy my ability to trade again tomorrow. And the smaller and smaller I can keep my losses, the tighter I can keep my risk, the more aggressive I can be with my position sizing, and I create that asymmetric upside for me in my P&L. And that's ultimately how I maintain success and consistency. So it's not necessarily consistency in my strategy. It's not consistency in my even order execution technique. It's my consistency of being happy with small losses, finding validation from that, and then building out right from there. So there is no profitable trading if you're an unprofitable loser. So you got to fix that part first always. And that's always the thing that cracks first, that destroys your ability to have an edge. And so the more I obsess over those variables, the more that I stress them, the more that I can convince you that that's the only thing that matters, the more money we all make, and the more my strategy looks like it's incredible, right? But my P&L is a second order consequence of my ability to lose small and to lose in control. That's it. Full stop. All right. Final call here, guys. Final call. All right, Mike, to be honest, being a good loser is the number one reason why any strategy wins or fails. So, there's not like you can't out earn bad risk management, regardless of what scale you choose to trade on. And it's not sexy, right? It's not super fun to focus on those things. But profitable trading isn't about being entertained. It's about making money so you can do whatever the heck you want with the rest of your life. So that for me is what's important. That's the variable that we should be obsessing over controlling the most, because all of our bad trading habits, impulses, reactions, whatever, are all a symptom of poor risk management. And that means not protecting wins, right? That means not accepting losses, all those things. So when we obsess over those variables, everything else kind of falls into place because we're able to execute the formula in a calm and controlled way. And that's all it is, right? So the psychology of trading is about avoiding ways where you self-sabotage yourself and complicate your process more than you need to. The way that you maintain that positive psychology so you avoid that self-sabotage is not allowing the number to break you. So the only way you can do that is to find ways to gamify losing small, build up your tolerance to that number, then push your limits and improve. And that's how you win. All right, guys. So no further questions, I guess. Same deal like always, right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. My personal life is going to get in the way a little bit here today, so bear with me, please. And yeah, just for those guys who are using Zoom, right, who have used those, please don't use the chat in Zoom. I have no visibility over that during the trading day. Please use the live trading chat inside Discord, because honestly, I just don't have the real estate to monitor that many different chats. I'll mention that again tomorrow. But yeah, I mean, I've been really happy with how it's been working. My computer has not melted down. So pretty positive. But yeah, same deal like always, guys. If you have any questions, hit me up outside of market hours. And we'll be back at it again tomorrow to hopefully finish off the week with a bang. So have yourselves a great day, team. We'll talk soon.